Good afternoon, ladies and gentlemen, or good evening for some people. This is investment show with the name Modern Investing. My name is Sasha Star, and today's guests are Dr. Milan Sambrak. Welcome to the show.
Thank you for inviting me, Sasha. I hope I can make a contribution.
We all hope, of course. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you for inviting me, Sasha. Great to be here.
Yeah. So today is Wednesday, and as usual, there's a little bit of green here and there. Yeah. How does it look on your screen, Jim?
I have mostly green, but I don't know if the market knows what to do, because there's a lot of uncertainty right now.
Yeah.
Usually that means some red, and there is some red here, but mostly green. And Nvidia is again the best performer in my portfolio. I just checked before I came on, and another semiconductor stock that I've been promoting is our MRVL, Marvel Technology,
Yes. It's good.
and that's my second best performer. So
Jim,
that seems to be, concentrating on those that sector seems to be paying off because I still think the AI boom that we've been experiencing is only at its beginning stages.
so how is S&P 500 doing today? SPY. Is it doing anything at all?
Is that to Milan?
Uh, I can check here in a second. Won't take long.
It's up
And
a fraction. Yeah, it's
yeah,
holding steady at record highs.
yeah. It's been doing unusually well. Now that I'm
Unusually
looking,
well.
I can't find it, but yeah, it's at a record high. Yeah.
And the Nasdaq is doing extremely well too. It's over 20,000.
We're talking here short term, and we really need to think long term.
See,
That's it.
I will disagree with you because if you are looking at the long term, but in the meantime you have red on your short term, so your short term is becoming liability, and therefore your long term gain, which will or not materialize, only time will show. In the meantime, you're suffering from red. Jim, what would you do in case of investing in Marvel and Nvidia? You would invest the same funds in S&P 500. How would your investment look like?
Well, they wouldn't have been performing as well. They would have been up, but not up in the levels that they're increasing in terms of the investments that I'm making. Um, and I think Nvidia is of course part of the S&P 500. Um, Nvidia, it just seems to be it's hit over 170. And I remember we were talking about um, you know uh, levels at 150. Would it break through 150? And so what's the next barrier to its high? I don't know. I'm asking you, Sasha, because you've been pretty good at predicting the highs.
Well, remember when Nvidia was trading around 135 for quite a long time,
Hmm.
and all-time high was 153. And my prediction was that it's a resistance, which if will be and when will be broken, is the same will become now a support level. So right now, support level of NVIDIA is indeed 153 to 155. That's a support for NVIDIA. Now, how high it will go, obviously, it will break through 200 and not in too distant future. I think it will happen even before the year end. And so therefore, the 170 or so will become a support level. Once it's breaking through resistance, the next resistance is very difficult to figure out because if you remember, many times NVIDIA would have some resistance levels, and if it broke through, then it will go almost vertical line up, then it will split 4 to 1, then it will split 10 to 1. So once NVIDIA will break through 200 and will go to 240, 250 maybe, it will definitely split again, probably 2 to 1, maybe 4 to 1, something like that. So in a way, you're asking how high will go NVIDIA. In fact, um, Right now, it has no resistance because it's all new time high. So resistance
Is to be determined. Yeah.
has to be determined, and so far, I'm my worries is not how far Nvidia could go in the short term or long term. My worries is about the tariffs and everything
Yes.
what Trump
That's
said.
the great unknown. We don't
That's
know.
unknown, and here lies my worry because okay, he now okayed NVIDIA selling its H20 machines to China. Okay, what's happened if tomorrow he will say no longer sale to
Right.
China? Okay, so NVIDIA will tank down to its support level 153 or 155 support. So right now, most of my positions, I don't keep it overnight. Does it make me a day trader? I don't care.
Well,
Because
you should, Sasha, you should. Most day traders lose. No
I
question.
don't care
Not a
about
second.
You buy and sell every day too, Milan, right?
Well, yeah, okay. May I make a few comments here?
Sure.
please do. We always
Charlie Munger, during those Berkshire Hathaway meetings, used to say, after Warren Buffett spoke for a while, he used to say, I have nothing to add. Well, that's not the case with me. I have lots to add. Now, Sasha, you're very enamored of the book Market Wizards.
Yeah.
Peter Lynch is not in Market Wizards.
because he's not.
James Simons is not in Market Wizards.
He's not. That's why he's not in the book. So what else you want to add?
They consistently beat the market. Warren Buffett has performed nearly double the amount of S&P 500.
It was 200 years ago. Today it's irrelevant what they did. It was
Okay,
100 years
let me quote David Swenson, who ran.
Oh, yes. That one is, yes. He's not, by the way, in the book, but doesn't
No,
matter.
he's not. But David Swenson said that we should have an asset allocation, which really determines to a greater extent how we do in the market than any other thing. So he said an asset allocation where you have a lot of money in funds. Personally, mine is 50-50. 60-40 is also good, 45-55, any of those, so you have a lot of money in cash. Wall Street hates that because they don't make anything on the amount that we have in cash, so they will do everything possible to discourage such an asset allocation. But the way it works, and I personally experienced this, is when the market is high and we have a lot more of the S&P 500, say an exchange-traded fund that tracks the S&P 500, and SPY happens to be the best. We can go into it if you like, but it's the best. If you happen to have that and the market is up and you no longer have your 50-50 asset allocation, you take profits to bring it back to 50-50. When the market is down and you have a lot of cash, you use that cash to buy bargains and bring it back to 50-50. You're always buying bargains and you're always taking profits. Most investors do the exact opposite, and most investors cannot equal the market. Equaling the market is a piece of cake. Here's what you do. You buy an exchange-traded fund that tracks the S&P 500, period. That's all there's to it. You equal the market. And what does that mean? What kind of investment is the market? Well, I'm trying to sell a house now. I have an investment property, a house. It's worth about $800,000. Now, if I had an $800,000 worth of SPY, let's say, or an exchange-traded fund that tracks the S&P 500, I could sell it in less than 1 second for a transaction cost of less than $10. So I am sorry I ever got into this investment property that I have that I'm trying to get out of now. You got to pay real estate fees and you got to pay taxes because it's not a primary residence, and on and on and on and on. So there's a lot to be said for what David Swenson says. He says that if you have an asset allocation with a lot of cash in there, say 50-50, and you don't pick stocks the way you guys are doing, you buy the American market as a whole, it is close to 0% that you can beat that. Yes, some people have done that, and I mentioned Warren Buffett, and I mentioned Peter Lynch, and I mentioned James Simons, and you two gentlemen, but you guys are the exception. The vast majority of investors don't equal the market. they can do so in no time at all. And by having I sound like a broken record because I'm saying this all the
Yes,
time.
you do. Yes, you do. Big time. Big time. Now, let me tell you
But it's
something.
good. It's a good strategy for a lot of people, Sasha.
It's
We
a
have
good
For most
strategy for a
most-
lot of people to save their money, to preserve their capital, and I have no problems with that. Although, yesterday I've done a latest calculation on my investments since I started using my strategy, and in 2 years and 8 months, I've generated 520%. And the only losing month was April of this year, thanks
a
to
month for
Trump's
everyone.
Liberation Day.
Sasha, can most investors say that?
Why would you talk about most investors? How do I have to relate to most investors?
Well, personally,
I don't give a damn what most investors are doing. I don't give a damn about Swenson and Buffett and all these people together. I
Well-
care only about one person in this world,
well,
and
you
the
know,
person's name is Sasha Starr. Okay.
I was going to guess that.
Sasha, I'm a retired dentist. And
Yes.
people who are in healthcare because they care about other people. You don't give a damn, that's okay by me. But I do give a damn. I do care about other people. I want people to do well because the better other people do, the better I do too. So
Okay, that's wonderful thing. And if I would be in medical profession, I would do exactly the same thing. But I'm not. I'm in investments.
you
And
don't care about others, but I do. And you know what?
well, I do in investments. And people will do whatever they want to do. And I don't give a damn what they're doing, whether they're losing or winning or so on. It doesn't affect me. Wall Street doesn't affect me in any way whatsoever. The only thing is, I have to adjust my trading strategy according to what I see on the market. What I see in the market now, many days lately, market opens up and then during the day is slowly sliding down.
Yeah,
To me, it's a message that institutional money are leaving the market. So they're bringing it up. So the all this average Joe and whoever they are, they're jumping in, they're buying this and that and that. But during the day, it's all going down, and it tends day somewhat down. Well, today is Wednesday. It's an unusual day in my estimation. But even today, I'm careful. So I'm not selling all my positions at the end of the day. I don't do that. And if you sell, it's better to sell it at the beginning of the day because you will get higher prices. But of course, I'm using options to guard my profits. So NVIDIA, positions that I have, they're all covered calls. However, what kind of covered calls? If I believe that the market will go down, which I do now, because of various factors, and tariffs just one of them, then obviously I will sell. Let's see if NVIDIA is 170. I would sell, say, November 160 call, generating enormous amount of cash for each position. That's what I would do. Same as NVDL. The only thing that I don't sell covered call is NVDY because today it announced a juicy $1.02 for each share. So with 15,000 shares that I have, I will get by Friday over $15,000. That's what counts. So whereas the Swensons and Buffetts, all these wonderful people in the world, they can do whatever they want to do. I will do whatever I
want. Mark here with a question.
Would you agree with this?
And a question that was actually based on this whole discussion that you are having with Milan, Sasha, and everything like that, because there is this notion that exists in everything. Because actually, right now, in addition to doing the podcast, and I'm doing some of my grading work that I do and all along those lines, even though they like the term scoring versus grading and everything like that. But one of the students was saying
Or-
that there are people in the world that care, and all along those lines, because they're talking about lawns and things along those lines, and how they can be important in our society. And there's this notion of social investment. I forget the exact term, but I know that Jim is talking about it before and everything like that. So how important is that? Because it sounds like it's not important that much to Sasha, because Sasha is trying to make money for Sasha and for Sasha's family, which I understand, and all along those lines and everything. But how important is social investment in general? So I'm directing it to Jim, but then I want to hear from Sasha and Milan as well.
No,
But
I will abstain from answering this question because to me, social investment is there are like two animals that you're trying to pair, but they don't work together very well at all. So I abstain. If Jim or Milan would like to comment, please do.
Sasha, do you agree with the statement that we see the world as we are and not as it is?
Nobody knows.
We see the world as we are and not as it is. That's a fact. Now, the thing that really upsets me, and it doesn't upset you and many others, is during any given 30-year period, the market has gained about 1,000%. During that period of time, the average mutual fund investor has made 250%. That bothers me because the compensation that the corner suite, Wall Street, is getting is unconscionable. What a guy like Jamie Dimon makes in a day would take a dentist 10 years to make. And so the S&P 500 has gone up 1,000% in any given 30-year period, during which time the mutual fund investor has made 250%. A huge number of people own mutual funds because they're promoted so heavily, and they're promoted heavily because Wall Street makes a ton of money selling this kind of stuff.
no, I understand what you're saying. Okay, Jim, and I'm gonna get out of here and go back doing what I'm doing, and y'all can
Please
finish
do.
the show and everything like that and everything. But Jim, along those same lines, there was a time, and you probably know this story and everything, that kind of people would invest in things or not invest in things because of what they felt the corporations were doing. I'm thinking about like South Africa and apartheid, but there was even rumors of Snapple. If you remember Snapple, there was rumors that Snapple was owned by a racist individual, and therefore people would at time were not buying Snapple, the soft drink, because it was supposedly connecting. Now, whether that was true or not, that was never, I think, verified. But that was a rumor that stopped people from buying Snapple because they were like, well, that's a racist organization. I can't go buy Snapple.
Well, Mark, for me, I would say that a lot of my social investment is a negative way, in that I won't invest in companies even if they're profitable.
Yeah,
I think harm the environment and do things like that. And one of the things that my niece was very very active in social engagements, and as a gift, I bought her Beyond Meat, which was a company that was producing not non-meat based hamburgers and things like that. And the company hasn't done very well. And so the gift that I gave her is getting less and less. So I haven't really been guided by, I want to invest in this company because they're doing good, as much as I've been negative in that I won't invest in companies doing harm. And if companies are doing good and their revenue profits, they have low debt and good revenue projections, then I'm interested in them, and doubly so because they're doing good. But they have to be a well-run company, generating revenue, generating profits, for me to invest in them, unless it's a gift that I'm giving. And then I will take that person's individual preferences in mind and act accordingly. But I don't think that the green investment strategy is a good one overall for an investment. If your goal is to make money.
You're right. You're right, Jim. You cannot buy cigarettes or alcohol at Walmart. Selling cigarettes and selling alcohol has been very profitable for a very large.
Alcohol is now being sold in Walmart, at least one that is close to me. Walmart is selling beer. Walmart is selling wine. What's the problem with that?
They are?
Yeah, of course
Walton,
they are.
yeah, Walton didn't like that because original. That's new. You know what? It's new managers, I'm sure, because the original position was not to sell anything that's a sin tax. Socially responsible investing, I think, is what you're talking about, James. You want to invest in socially responsible.
Okay. Hell with social investment.
Yeah, there goes his abstention.
What I'd like to mention, Milan, you were talking about coroner suit and how much money these people are making on top, mutual funds and everything else. Tell me, Milan, have you ever thought about becoming an accountant? Because if you would count somebody else's money and being accountant, you at least would be paid for doing this job. Now, what you are talking about, you're doing a lot of accounting without even being paid for it. So what's the purpose of you counting that Jim Diamond made so much money and Swenson made that much money? How does it help you in life?
Well, you imitate those who are successful and avoid making the mistakes that other people have made. That by studying, learning, and so it is a good thing to practice looking at who's been successful and why, and see if it's the path that you want to follow. But the other thing that you're talking about, Sasha, and that I do is, you learn to trust yourself and your own judgment, your own discretion, and you also learn that your ideas might be good. You test them, and then based on the results, you learn from experience, and you grow as an investor, and you become more knowledgeable, more competent, more able to generate the types of revenues, the types of income that Sasha is talking about. Actually, I followed your advice. I bought NDVY, it's the return on investment, but it also piggybacks on what Milan was saying, is that when it's up, the dividend is a lower percentage, and when it's down, the dividend is a greater percentage. And so I don't care as much if it goes up or down. I'm still getting a big dividend no matter what is happening to the stock. So it's an interesting way of looking at investing.
Jim, if you're following NVDY, the 4 weeks ago, the dividend was 67 and some cents. And today, 4 weeks later, it was announced $1.02. So it's a growth absolutely incredible. But what's most interesting thing is that the 4 weeks later, you will see even bigger dividend, because in this 4 weeks, the NVIDIA stock is moving up. So they will sell more covered calls, they will generate more premiums, therefore they will pay more dividends. Although I must tell you that a few months ago, they were paying dividends as much as $1.60 a share.
Yes,
and
I remember.
Times when it was over $2 a share.
Right.
When a company issues a dividend, its value drops by the amount of the dividend. Now, Warren Buffett, Berkshire Hathaway never issued a dividend, so the value never dropped. The price fluctuates. Company issues a dividend.
This is what makes it modern investing, Milan, because this company, NVDY, is focused only on yield. It's maximizing the yield on the stock. So the entire attraction of buying the stock is because it's going to pay those dividends. It's not because the value of the company itself. It's a new way of looking at it, which is what my point is, that I never really thought about this type of stock before until I listened to Sasha talking about it. And then it seemed attractive to me, so I just experimented with it. I didn't buy a lot. I bought 2 lots of it. And so I'm not making a whole bunch of money now, but it was something that, like I was saying before, you put your toe in, test the waters, and then you see if this is working. And if it is working, keep doing it. And if it's not working, do something else.
I'll suggest you one exercise. You can do it right now in a matter of 15 seconds. Go to Yahoo Finance, type NVDY, and go to see the yield. And once you'll see it, all your S&P 500 and all other investment ideas will go up in smoke.
but he's doing that and everything. Hey, Sasha, just really quickly, because I mentioned the
Good
social
buy-in too.
investment and everything like that. But there was a time that people invested because of their moral stances and everything like that. I think that's kind of what Milan was alluding to and everything. Because I remember there was people that used to invest in Chick-fil-A. It's a very popular restaurant, a national here in the United States and everything. And I think it was Great American Hero or something like that, because they were seen as a Christian organization, and they would not be open on Sundays.
Marco, why don't you start a morality show?
No, but I'm saying it's a form of investment. There are people that
please
invest that
don't.
way.
No, Mark, please don't. Whenever it comes to investments, please don't talk about the morals or the green investments and all other wonderful things. What other investments you mentioned?
Sasha is
make a lot of
interested in
money.
return on investment.
So that's what's the ROI, which I understand that.
ROI.
You can
And
make
there's a lot of people that are into ROI, but then, like even Milan has brought up, there are people that have this moral standpoint, or that's why they invest in SYL.
You could make a lot of money investing in opium. You interested in that, Sasha? Would you invest in opium? Tons of money possible there.
Show me good stock, paying dividends, and if I will choose it, okay, I'll go for it. I don't think so that I will do it.
I mean, later on Wednesday. Today is Wednesday. Jim, the other gentleman that is out of California, will be doing a show on cannabis. He has a whole show about cannabis, and there are a lot of people that are invested in cannabis projects, whether that's cannabis liquids, whether that's cannabis drinks, whether that's cannabis, a number of other things like that. And I'm trying to think of the gentleman's name because he used to be regular on our new show as well and everything. But that is, to Sasha's, to Milan's point, that is kind of what he is promoting, is people investing in cannabis products, because that's a lot of money that people can make in that.
You can make a lot of money. You can make a lot of money investing in places other than the stock market if you know what you're doing. For instance, you can make a lot of money in coins if you know what you're doing. You can make a lot of money in stamps if you know what you're doing. Which reminds me of a charming story about Peter Newman, who was a Canadian author and writer. Originally, he was born in Vienna, and when Hitler decided to annex Austria, the Newman family was fleeing. And they were fleeing. A German officer, Nazi officer, calls him over and says, "How old are you, little boy?" And he says, "I'm 8 years old." And the German officer says, "Oh, I have a son who is 8 years old, and his name is Hans." So they talk back and forth. They're talking about it. After a while, Peter Newman says to the German officer, "My teddy bear, I would like Hans to have it. Would you please give it to Hans?" He handed it over.
I
The
know
teddy bear was full of valuable stamps. The family's entire fortune was inside that teddy bear. So that can happen. You never know. Yeah.
Well, that's commodities trading, which is a different topic entirely.
Yeah.
But when Mark was talking about cannabis, there are people that don't think of it as a sin and think of it as, for example, medical good and help people. So a lot of this goes back to our perspective on things. What is good to somebody is bad to another. And so what we want to be is more objective, I think, when we're talking to a viewing audience and talk about the return on investments. Does the company have debt? That I shy away from. Does the company have good revenues, projected revenues? Then I'm very interested in the company and what it produces. The factor of what it produces, I think, is look at society and what is the future of the society in the near future. I can't project too far out. What is going to be attractive? What are people going to be buying? And what I have concluded from that by doing that type of analysis is artificial intelligence is a growth area.
Yeah. James, would you say that there is good debt and bad debt? For example,
yes, I agree that there is good debt in the sense that if you want to start a business and you have to take out a certain amount of debt to invest in yourself.
But if you buy a car with borrowed money, that's a stupid thing to do. Whereas most cars on the road today have been bought by borrowed money. You're spending money to buy something that will decline in value.
As soon as you drive it off the lot, yes.
Actually, I would ask you a question, Jim. For example, let's say you have $100,000 available, and you need a car. A new, used, doesn't matter. Let's say a decent car will cost you say $25,000. probably used car. Yeah, there's a new car, 45, 50. Okay, so let's go for a new car. Why would you drive a used car? Okay, new car, $50,000. So here's now a choice. You can put $50,000 for a car, paid in cash, and you have now 50,000 left, which you can invest, possibly NVDY, maybe something else. Or you can take a cheap car loan, say 6.5%. Most likely it will be even less, 3.5%, 4.5%.
Yeah, right.
A leased car, there are so many offers, a percent and a half, 2.5%.
Yeah.
So now you have $100,000 still available. So you can buy NVDY, you can buy NVIDIA, and you can buy probably AMD and Marvel, maybe something else. So you have now very promising stock position. You have a new car, and what you're paying, actually, your stocks will make several times a month profit, from which you easily will pay whatever it's lease or interest loan or so on. What would you choose?
I know a very smart woman who leases, and I have been very jealous of her because she leased a Tesla when I bought mine, and so she can upgrade it periodically. And I'm still driving the old one from 6 years ago, and now if she doesn't like Tesla anymore because of Elon Musk or for whatever reason, she can lease a different car. And I'm stuck driving my Tesla whether I like Elon Musk.
It's losing value daily. It's losing its value. And,
Yeah.
But you might as well drive it, because what else can you do?
I made that decision, and I regret it now. But at the time, I thought it was a good decision, and I was very happy with it. And who knows what the future will bring? And you make adjustments based on the future. And but I think your point is well made. If you can make money doing this and lease something like a car, which is going to lose value, then that's rational to me. That's good thinking. And a logical way to do it. My dad always paid cash. He didn't like that, and so
It's old school.
It's old school thinking. Yeah, I agree. And it took me a while to think that debt can be a good thing. And student loan debts, though, are in the news all the time because people are not getting the jobs and the income they expected to pay them off.
No, but you're right, James. A couple of things about your Tesla. You might like to know that the record for a Model S Tesla, the number of miles it has on it, is over 1 million miles. You got a long way to go before your car gets to that. So it was a good buy. Yeah, that's right. Yeah. So bad debt. I'm a dentist. Most dentists, almost all dentists, have to borrow money to start their practices.
Sure. Yeah.
That's a good debt. But also now, some car dealers will lend you the money to buy a car and charge you 1%. So let's say you're going to buy a $50,000 car and you borrow the money entirely from the car dealer at 1%, and invest the difference will make a lot more than 1%. That's not a bad way to go, is it? Yeah.
Absolutely not.
Yeah.
So strategy of paying cash for your purchases may not be the best strategy. Probably.
Right. Yeah. That'd be true.
Yeah. Well, okay, so we are now approaching the end of our program today, and we'll see what market will do in next week. So we will discuss it next Wednesday, same place, same time. Thank you very much
for
the program. All the best and good luck in your trading. Thank you very much, everybody. Bye-bye.
Best wishes. Thank you. Bye-bye.